Alright, this is Justin with Targeting Alpha. Welcome back to the channel. If you guys haven't subscribed yet, please do. Lots more videos coming in the future, but today's video is going to be a breakdown on bull flags, pennants, flat top breakouts, F patterns. I mean, every guru has their own name for it, but really it's just a strong move up and a period of consolidation followed by a breakout of that consolidation. So just don't overcomplicate it, guys. It's really a pretty simple, pretty effective pattern. I mean, it's one of the most, I think, successful patterns that play out. I mean, you will from time to time get a breakdown or a false breakout rather. But for the most part, if you can catch these setups, they're pretty easy and pretty simple to manage risk on. So pulling up this chart on AMD, I did want to show you here. And the thing is, these aren't always perfect, but what you're looking for is a strong run up on heavy volume comparative to the pullback on less volume. That's really the only two things you're looking for. So whether it's a consolidation, let me just remove this from the chart here. Whether it consolidates over like this and you have somewhat of a ascending triangle type pennant, or you have something more straight over. Now, with the straight over, I find them not to work out as much. So if you have a run up and then you have a consolidation period where it kind of moves directly straight over, I tend to find those not to work out as much, but you can always play the breakout or high a day breakout on those two as well. You can also have your kind of standard flag pattern like this. You could have it coming down more symmetrical into a downward channel. But really the point is just a strong breakout on high volume comparative to the normal volume. And if you watch my Thinkorswim video, you can see the setup here for your current bars. So I do like to use this because it goes back 30 bars and it gives you the average volume of those 30 bars. So you can quickly see the volume on this far exceeded. Well, I mean, looking back pre-market, it's not going to tell you as much, but if you're in an intraday breakout and you're on a 5-minute chart and you're 30 bars into the day and you're seeing the pattern set up, it can give you confirmation on, what the volume was looking like comparative to the average. So again, just strong volume up, a consolidation period, whether that's straight over, whether it's a pennant, whether it's a pullback into a channel, whether it pulls back into a wedge. But really you just want to get some points of contact here at the top. So on this one, you'll have a point here and a point here. And as soon as I get a strong kind of look into what that upper trend is looking like, what I like to do is to see volume stepping back in. As you can see, it pulled back here. And you see on this candle, volume stepped in. It broke out through the upper trend line. And it also, on a 5-minute candle, it was really the first to break over and make a new high. A 5-minute candle make a new high. You did have it here, but at this point, you really didn't have much of a consolidation period. So as you can see, this did break out to the upside for a nice move. Now, let me just look at this chart because I'm pretty sure AMD is going to have plenty of breakouts here. So here you'll have a longer time frame breakout. Stronger volume up. Volume kind of tapered off. You can see this real low volume in here comparative to this run up of this move. Got another little pullback here. First green candle out of the upper trend, make a new high. It consolidated on lower volume here comparative to this run up volume. So that's really what you're looking for because it's market psychology, right? So you have a bunch of people that bought into a move strong. The move is starting to pull back or consolidate, but there's not a lot of volume there. There's not a lot of people saying, I want to sell this stock. There's not a lot of people saying, I want to buy this stock. But there's plenty of people watching it, right? Because you had that strong move up on volume. It pulls up on a lot of people's scanners, a lot of people's charts, and people are just waiting for this volume confirmation. And you can see that kind of move into this chart, and you get a strong move up. Now, you can play this a couple of ways. So if you got a strong downward channel here, if I'm getting a third touch on that channel, sometimes I'll try to play along with a very tight stop at that. Because to me, it lowers your risk management. I mean, yes, getting the confirmation is good, but if you're not really worried about burning a day trade, it can be a good spot, especially if you're getting a 3 touch on the bottom channel. The other thing I do like to look for is a Fibonacci. So you had this pullback here. If you ran a Fibonacci up to this top of the move, I don't like to see any more than a 38% pullback. So this isn't a great example, but let's take it from this longer time frame and see how that pulls back. Let me just delete this one here for you guys. So here on this move up, and you had your pullback into the channel, it held that 38.2 Fibonacci retracement. So I think that these flag patterns, pennant patterns, whatever you want to call them, whatever they are, the runs up and consolidation period, if they hold that 38.2, I think the move's stronger. So not to say that every single time that's my rule, but it does give you more confidence in the probabilities, I think, when you are seeing that. You can see this move played out here into a follow through the next day. But yeah, that's basically it, guys. Don't overcomplicate it. Just, you need a consolidation period, whether it's straight over, pull back, pennant pattern, flat top breakout, whatever it really is. Don't just be like, oh, that's not a perfect bull flag. And then the other thing, too, to kind of touch on here is if you're buying this bottom channel and it does not break out to that upper channel, most of the time I'll just take profit and see if it pulls back further. Again, another way to play these two is on the break of that upper trend like we talked earlier. Now, if on the break of that upper trend you don't get a break of this high, I'll take profit there too as well. If we're having trouble pushing up through that high, it's probably going to be a failed breakout, double top, and you're going to see a move back down into a bigger consolidation period like this. So the other way to play these two is wait for that break of that high. So you get the break of the upper trend, you get the break of this high on the previous move, and you can see that that worked out too as well. The only problem with that is you can't keep your stop as tight, right? So if you're buying into this move here, I mean, really you need your stop probably at this trend line. So you need to be kind of managing it, watching it, because a lot of times you will see, especially on a move that's more or less pronounced and over, like say you have something like this, right? A lot of times when you get that breakout, even though that breakout over high a day, you're going to come back and you're going to retest that trend line and pivot off of it. It did not in this case, but that is something that will happen a lot of times. So you need to really have your stop set minimum under that trend for a retest. You could set it right under that break for a pivot. And a lot of times these will come up, break out through that high, come back and pivot that move. You can see that's what happened here. But sometimes if you have your stop set too tight there, it's going to fish you out. There's going to be someone there that's going to sell market and hit your stop. So, really that's why I like to try to get in on these moves. Now, again, you don't want to carry too much size here, but if you can get in with a starter position here on a third pullback here, or you can get in on a breakout of that move, you can always add to it here with the breakout of the high a day. So if you're buying here a starter position and you're buying here the breakout of that move, that gives your break-even point an average lower than this high a day if it does retest, right? So, if you're buying for $18, 100 shares, and then you're buying at $18.50, 100 shares, that's going to bring your average down in between that. So it's going to give you a little more breathing room on that stop. So again, many ways to play that. Either a triple bottom trend line, you can start to play it there. Keep in mind, you want it to be above that 38.2 for higher probability. You play the breakout of the upper trend. If it doesn't break through that high a day, you sell for a small profit. If it does, you are probably going to hit into a pretty nice move. The other way is to play the breakout of that high and then set your stop at least at that upper trend line. Minimal under that pivot point. So I hope that made sense for you guys. I tried to simplify it. I know it's a lot, but really these are just really high probability setups. And the point I'm really trying to make is, you look on Google and you type in a bull flag or a pennant pattern or whatever. None of them are going to be perfect, right? So don't always look for that perfect pattern. You really got to play these things based on that volume. That's the most important thing. Strong volume up and a consolidation, whether it's sideways, pulls back, pennant, triangle, ascending breakout, whatever you want to look at. It's going to be something that has lower volume. And then that volume stepping in, as you saw in this candle here. So if you guys got questions on this, feel free to comment. Definitely like the channel and subscribe. I'll be doing more breakdown on candle patterns. For you guys beginners out there, I'm going to be doing a video here soon on the kind of process of learning to be a day trader. These videos that I've done for this channel have kind of got into a little more in-depth type strategies, right? And I think I'm doing a little bit of a disservice to you guys that are beginners out there by not giving you kind of a framework. So my next video is going to be kind of a framework on what steps to take. What do you learn first? You know, what's the step 1, step 2, step 3, and where you should be kind of investing your time as a beginner day trader. So that's all I got for today, guys. Good luck. The market's about to open here, and hope you guys make a lot of money in your trading today, and we'll see you guys next time.